Hello and welcome back again to my channel. I hope you're all doing good. So in today's video, I'll be sharing with you different tips on how to save tax in the UK as a small business owner. At the end of every tax year, HMRC requires all business owners, whether self-employed, limited companies, to file their self-assessment tax return or corporation tax. So it's important to highlight that tax avoidance is legal. It's simply you using legal means to reduce the amount of tax you pay to HMRC. However, tax evasion is illegal. It is a criminal offense. It's falsifying record in order to reduce your tax. So that is not recommendable. So I'll be sharing with you guys 9 steps on how to reduce your tax as either a self-employed person or a limited company. The first step is choosing the most efficient business structure. So when you're starting up a business, you have to think of the long-term effects of your business. When you're setting up your business, this is what you have to think of: the long-term plan for your business, the vision that you have for your business, and decide the kind of structure that is most suited for that business, because that will, in the long run, determine how much of a tax you pay. So it's important for you to make that decision as early as possible before you set up your business. So if you set up a business as a sole trader, it is potentially higher personal tax. You might end up paying higher personal tax because you are not separate from your business. That means if you go into litigation with a client, you might end up paying the client by selling your house, your personal belongings, in order to foot those bills. So versus limited company is a separate entity. The business is separate from the owner. If eventually you go into litigation, you just what the business has that you can use to pay off those debts. Okay, unlike a sole trader, if you have court case that requires legal fees, you must foot the bill with your personal belongings. So these are the things that you have to look into to see if you can handle it. And a limited company has the potential of paying lower tax compared to a sole trader. As you can see here, a limited company in this tax year can pay between 19 to 25% of corporation tax. However, a sole trader pays about 20% income tax in their self-assessment tax return.